Good afternoon, traders. It's TK for ReadySetFutures.com. It's the 2nd of October, and this is your weekly review for the week of 26 September 2016. If you guys are new to this, the rundown will be as follows. We're going to talk about performance and how specifically our performance was last week, both from a channel perspective as well as a trading perspective. We're then going to take a walk over to our weekly and daily charts of the instruments that we typically look at. So that's copper, crude oil, gold, and the ES. And then we're going to get to everybody's favorite, which is the commitment to trader report and the oscillator that we have developed. And we're going to look at the markets that we typically look at, plus a couple of bonus markets, including silver, the VIX, and the dollar index. And so with that, why don't we get started with point number one, performance. Performance on the channel this week was good. I'm going to call it good to very good. We were able to get out a daily market wrap up to you every day. Wednesdays, Tuesdays, unfortunately, we were able to get out on Wednesday morning. So I'm going to give myself a good 4.5 stars out of 5 on this one, fellas, simply because of that. Did get some feedback in the comments over the week, which was really helpful, and I want to encourage you guys to continue to bring it in. As always, keep it constructive. You know, I'm doing this work as part of my trading activity, and I'm doing it and just sharing it with you guys. So, you know, if you have something to say, like I said, keep it constructive, and I'll get back to you guys in the comments section. If there's things that you'd like to see that I'm not showing, you know, by all means, go ahead and make a request. I'll see what I can do. So from a channel perspective, it was good to get all of our daily market wrap-ups out. We're doing our weekly review here. And I started also to use stock twits as a way to increase viewership on some of these videos. So I think overall, good from that perspective. From a performance perspective, trading performance perspective, we did follow our system throughout the week. We took 2 trades this week. And, you know, I know for you guys that are day traders, you're like, wow, 2 trades for the entire week. That's not much, and I'd agree with you, especially if your perspective is, you know, getting in and out of trades within minutes. It's just a different way of trading. It's called swing trading, and some weeks are more active than others. So while not a tremendous amount of volume, we did pick up 28 ticks on Friday, right at the close, on a nice little scalp off of 2167 down into the daily volume weighted average price. And then earlier in the week, I got short off of 2157 3/4. No, 2152 3/4. Off a move back into our volume weighted average since Brexit, and took a bit of heat in the overnight before our Deutsche debacle on Thursday, and caught that move down and cut it short. Now, like I said in that video, I have a number of I have a few ways that I'm looking to exit the system. Generally, it's through a indicator-based stop. It's a volatility-based stop. And at times I'll get in and that stop stays active for a number of days, sometimes weeks even. This just so happened that it got out the day of. So I got in at the open or sometime during that day, and then my stop got triggered toward the end of the day. So that's just the way it happens. Prescient, because the following day was that just face melting rally off of Deutsche Bank rumors on Friday. So So, but anyway, that was, performance on the week. So that was, a grand total of maybe about 60, 62 ticks. And I will take that any week. So moving on to price charts. Again, this is the weekly review. We're not going to dive into any particular day. We're not going to dive into any particular, level of ticks. We're here focused on the bigger picture, looking at commitment to trader data, which, these are the broad brushes that the markets get painted with. And then, we're going to look at both of our daily and our weekly price charts for each of our major instruments. Again, keeping the perspective high so that it helps to inform what we do early on in the day. Now, moving over to copper, here's your daily chart on copper. And, you see these two volume profiles every day on our chart. And maybe I'll quickly explain what a volume profile is for anyone who's new to them or new to our channel here. So volume profile plots the amount of volume at each price level in the market. It also then calculates a volume point of control, which is this green line, which is the high volume price. And on the red lines are the value area boundary. And these are customizable. I think I have these set to 30% and 70% of the overall volume within the profile. Not price, but the overall volume. So looking at this, what does this tell us? We have this, you can see from the last major move down. This most recently, we plotted this, and we were actually expecting a roll over of copper after this this resistance line. It didn't happen. We acknowledged this was just just didn't happen. It was a bad call. And we've continued to trade higher, and it's nice, right? You can see these distinct high volume spaces that that copper puts in. I really like how you can, it's just an easy visual. And so I'm scrolling out here to what is this, November of last year, and you can see there's this bit of a chop zone that or consolidation zone, however you might want to look at it, of copper's trading action. And so we are kind of dead nuts right in the middle of that trading action, maybe just a bit to the high side. And you can see we also have kind of a secondary line of resistance that's coming in around here at 2.25 or so, right up really near the that upper value area boundary. So once we reach that, if we reach it, commitment to trader data will show you that that may or may not happen. That'll be an interesting place, another real strong line in the sand before we reach up here to this $2.30, which is kind of that upper area of the trading range. So yeah, you see just from the last move down, I do have a Fibonacci retracement drawn on the chart. We've kind of hacked around here at the 38.2, bumped up to the 70% retracement. This is one of my favorite retracements, folks. 61.8, if it's going that far, it's likely going to hit that 70% mark and then back down, right? And then 61.8. So we'll see. The 50% retracement as well is right up here around that 225 mark. So that to me would be an interesting place to get short. Although really on the long side, the only real thing that's telling me short is commitment to trader data, which if you've used it at all in your trading, it's a longer term signal. It's not anything that the market's going to react to today. So anyway, that's a look at. Well, let me bump out real quick out to the weekly chart, and so you can see just copper's ride down along with the rest of the commodity complex. And here's pretty clearly you can see this this trading range. Here's that Fibonacci retracement that we drew in. So this kind of action where we bump up to the 38.2, we come down, run stops at that terminal selling point, back up to the 70%, and this kind of back and forth here. This looks to me actually more so like distribution than it does consolidation, and that's where the that lower price pattern was thought to be, but not so. Selling off a little bit here in the overnight, but we'll see. We'll see how this plays out. So that's copper for us. Moving over to gold. Here's our weekly chart on gold, and here's everybody's just kind of favorite look. The weekly chart is really great to keep some perspective. Right here are the December lows that we saw down here around 1080, 1060. Our first move up, right, and then consolidation, and then our second move up here of consolidation. I just kind of want to show you how long this period lasted. So this was when February 18th, February 19th, the week of, right, out to the week of June 3rd. So that's 4 months of consolidation that we saw here in gold before we moved up again. And here we have July through the beginning of October now. What is that? 3 months. So, gold's one of those things, right? Maybe a bit slower of a mover. And it is. It's a thicker market. So what are we expecting in gold is this move down. Either way, we're gonna close out the business to be done in this region by sniping out these the stops down here. There's a large pool of orders, I would imagine, right down here around 1300, 1290, and moving then higher. You can see we've drawn in a little bit of a pennant, a bullish pennant pattern. If that's an onomatopoeia for you, that's quite a lot of hard consonants. In any event, you can see we're trading right at the lower value area boundary in gold. It's easier to see on the daily chart, but I just kind of want to wrap up the point here that this consolidation period is not it's normal for gold, right? It's not something that's abnormal for gold. Moving in to the daily, and this is what that action looks like. The most recent 3 months here of data. You can see a bit of finer detail our volume profile. Same kind of thing as on copper, right? Here's our volume point of control, and the red lines represent the volume value area anyway for price. And you can see as this we're right at the bottom of this pennant, we're just kind of trading around. It's stuck at the lower value area boundary. The move earlier in last week failed at the volume point of control, and has since traded off. So Friday's action, this was Deutsche Bank's rumored rip that we saw in all of the other markets. And gold, gold wasn't buying it. Gold sold off. So yeah, just on gold, again, trading lower here. Our expectation for gold, and we've talked about it almost every day. If anything, you can't blame us for being consistent here. We do expect gold lower than higher, right? That's kind of the hallmark of our consolidation patterns. And this pennant, I think, just kind of re-emphasizes that we've seen now 2 trips down. We're going to see a third, and that I believe we're going to penetrate these lows. We'll sweep down around 1280, 1290 before we trade higher. 1320, this lower volume area boundary, this is going to be an interesting place once we revisit it. When that is, I don't know, but that's our thesis on gold. Okay, moving over to crude oil. Crude's an interesting instrument this week. What did we see? So we saw some news in addition to some interesting trading action. News on the week was an agreement to agree, essentially, out of the Algiers summit that the OPEC ministers had. And if you've heard me during the week, I do have a cynical streak, and I'm not afraid to play that in the markets. My cynicism extends to the OPEC ministers and the organization kind of as a whole, as they, 2 years ago in their late November annual meeting in Vienna, and the output is we're going to let the crude oil market float. And then you hear rumor after rumor after rumor with zero action. So folks are talking their book. That's it. And maybe this time is different, but there's just so many holes left in, so many holes left to be filled in this, that there's plenty of opportunity to get out of it. So in any event, that's my deal on crude is I do believe that this is going to be trading lower. Commitment to trader data supports that. We'll get into it, and I just I believe this whole Algiers summit agreement to agree is just another farce. However, you may not feel the same way. You may feel very, very different about how this is going to trade, and I encourage you to trade your own thesis, develop your own strategy, and execute it in the markets. But here's gold on the week, strong week. We came up right out of the lower value area and boom, right into the upper value. So a bit of a round trip. You could see it has struck into our resistance lines, and let me go into the daily chart. We can kind of see this a bit better. So here's that upper resistance line or support line that we had drawn from the February lows. Again, this was all, if you were watching Commitment to Trader, they just kind of telegraphed this. In any event, it broke. We formed up a secondary, or our primary channel downward. And this was the Algiers news. The volume point of control had been up around $47, $48. It has moved down off of this most recent trade, the trading action in this week. And you can see we have our accelerating kind of secondary sort of trend line, resistance line off these two most recent highs. So price breaking through, coming up to that second or that primary channel and failing. We talked about this on Friday, failing at 48.30. And maybe it gives a bit of context looking at it from in this regard. And this is why we do this, right, guys? This is why we break out to the daily, to the weekly level, and actually talk it through. Trading above the upper value area boundary, and so gaining acceptance outside of the value area, which is an interesting thing. However, on the bearish side, we have failed 2 days in a row at this major resistance line. Major, I mean, because it's so damn obvious, right? I mean, this is everybody and their mother is going to read that and trade off of it, or not. But it's just an obvious place to get short. So, and as you can see, there's a lot of selling activity at that line. We tried 2 days in a row, boom, can't do it. And today we're selling off a little bit in the overnight. So it'll be interesting to see what happens, especially maybe with gasoline inventories, Cushing inventory. Just from an API inventory or AIP and the EIA inventory perspective. So kind of 2 weeks in a row where crude inventories came in below expectations, which are good from a supply standpoint, from a price appreciation standpoint. Same thing with volume at Cushing. And if you guys don't know Cushing, Oklahoma, maybe I'll do a video on kind of the overall oil supply network and whatnot. So it's kind of an interesting thing. Cushing look it up, Cushing, Oklahoma. Really, really interesting place and absolutely critical for the WTI, West Texas Intermediate, and the CL contract. The storage picture is looking better in Cushing. The only problem is gasoline is not. And that's been, kind of this dichotomous trading action that we see on Wednesdays, where we'll rip up on the good crude news and we'll just, dump on the gasoline oversupply. So that's crude, guys. I do feel that this is a non-deal coming out of OPEC. We'll see. We're not going to see anything until the end of November. So it'll be interesting to see how crude prices react until then. My thesis in crude is it's lower, and you know, this, you can see it here. If you're a resistance or a trend line player, you know, great opportunities up here at the $47, $48, but something to be very careful of, especially if you're a bear. These rumors could turn out to be true, and you could lose your shirt. So finally, moving over to the ES. What a wild ride on the ES. We're gonna move out here to our weekly, and you know, just for some perspective, this is out since 2012. You know, it's a lot of action. It's a lot of upward action, and you know, are we topping out? Right, we see kind of a 1, 2, 3 triple top, and quite the trading range, right? I mean, if you're just looking at this from a technical perspective, we formed up a trading range between 2080 and 1800 down here. And so this is kind of that breakout move, and generally what happens, right, on trading ranges, once we break out, we test back down to that upper boundary. The question is, was the action on this, you know, during the week of the 16th, was that test, the test of that upper boundary? We came down here to 2100, 2080, I would have liked to see it at. And so do you say that's close enough? I don't know. Maybe it is. Maybe it's not. But certainly in this breakout up, I mean, what an anemic bid. You can see this was just desperation here the week of the 5th of August. And then again here on the 19th of August. And we've sold off since. Certainly there's a bit of a resistance line. You can kind of faintly see it. I have it drawn here from the high of this bar here from the 9th of September, sloping downward, price obeying it like that freaking trend line owns it, but it doesn't, right? That trend line is just a line on a chart. Keep that in mind. The two volume profiles that we have up here, this is the Brexit disaster or sell-off, and then this is this most recent one here. This is from Chair Yellen's hawkish holding, you know, just a couple weeks ago, and then the last one was just from Friday's trading day. Moving in to the daily gives you a bit of a different perspective. Again, the Brexit and the this volume point of control had been up around 2173. I know because I had a short last week at 2173. On the volume point of control and missed getting in by a tick. But anyway, that's under the bridge. As you can see here, this triangle that's formed up has been absolutely respected just these past few days, Thursday and Friday, round trips to either side of it. And you know, so it's interesting. And Thursday and Friday we have Deutsche Bank and its problems to blame. Thursday's news out of Deutsche Bank, and I emphasize the word news, was that some major hedge funds were pulling their derivative book from Deutsche Bank. Friday, we get rumor, emphasizing the word rumor. It was on the daily market wrap-up right there on that sweet little thumbnail. Rumor that they had reached a deal with the Department of Justice. So much so that if you guys keep up with the news over the weekend, the CEO, John, what is his name? Cryan? I don't know. I'm not sure how you pronounce it. Cryan isn't going to the Department of Justice to negotiate until sometime in a few days, the article said. So that certainly doesn't scream established agreement. Also over the weekend, we've got news that they had another IT glitch. Customers couldn't get after their money. Poor timing on that one. But also news over the weekend that now Italy's largest bank is suing Deutsche Bank. So they just can't they just can't catch a break from these sovereign lawsuits. It's now the United States over mortgage-backed security fraud from 2008, and Monty Pesci suing them for some other such reason. I'm not really sure exactly what the beef is there, but yeah, they've got a lawsuit going. Interesting. So that's the ES. I am a bear in the ES, no doubt. The indicators that I've cooked on the ES, and the ES is kind of the major contract that I trade. I have a number of them that look at market breadth and look at some historically strong correlations with it and different indices, and the net total on this guy is short. So as I said, that trading range, and here's that trading range, right? 2080. It wouldn't surprise me at all to reach down and test the top of that. I don't believe that this down here, this here at 2100 was the retest of that boundary. So anyway, guys, that's market action. We're going to move over to the commitment of trader report. Commitment of trader report rolling in. Let me give you guys a brief intro, a brief orientation to this, if you didn't catch it last week. Mercantile interest commercials here are the blue line in all charts. Speculators, leveraged money, asset managers, those classes collectively here in the orange line, and then the gray line is the public. Here is a 3-year oscillator, the top chart in all of these instruments. We're going to look at a 3-year chart, and then we're going to look at a 6-month chart. Net positions on crude show our commercial interests creeping off of zero, and our speculative interests kind of just hanging out around 30% long. Or it's an interesting phraseology because it's not net long. It is an oscillator of the relative position over the past, whatever time frame is. And so, as speculators move up, generally we see the commercial interests just selling right into them. And if they don't move, price is generally going to fade. So, that's kind of what we saw back here in the February low time frame. We see, I'll just kind of talk through it here. The speculative interests bidding the market up, and commercials not following. So eventually these guys run out of juice and they begin to cover their position, and that's what you can see here. And who do they cover to? They cover to the commercials. What's interesting though, you can see as we've traded lower, the commercials are also trading lower, but they've begun to buy again, and that's interesting because our speculative interests have also continued to buy. So it may be interesting, on the week, these guys, their net change was lower. And so if it continues lower, I would imagine we may see lower prices overall on crude. 6-month chart, fairly similar. Although, again, 6-month versus 3 years. So the 3-year chart gives you the additional perspective. Moving over to copper, same numbers, same calculations. And what's interesting though, here you can see the speculative interests and our commercials are now kind of about dead even. I do then, if these guys are selling down, we should see copper lower. That's just kind of the way it goes with this. There's 3-month position, their 6-month position below the level of 0.3. If you're going to look, because it's an oscillator, the key levels usually here are about 0.7, 0.75, and then again at about 0.3, 0.25, which indicate overdone in either direction. So obviously the commercial interests selling back into our speculators, and we can likely expect a move lower based on just this action. Moving over to gold. Gold's interesting because now you see the public kind of selling off. These guys, And I'm going to tell you guys, I like fading the public. So if these guys are selling, you may want to consider yourself a long. Pick your spots, right? Pick your spots. That's all I'm going to say. From a 6-month perspective, these mercantile guys, they've generally been flat. I mean, they haven't really changed all of that much, which is fine. So that just shows you that they're not really driving the price action. The public more active, and the speculative interests also more active. You can see that same kind of action here on the on our 3-year chart. But here are the December lows, right down here, and this was our move up back here in May, June, and again they've just been kind of sitting on it. So we'll see what happens with gold. Heading over to the chart of silver. Now silver, we don't usually cover silver on a daily basis, but that's okay. Silver moves faster than gold, at least in my experience. Dead zero from an oscillator perspective. 6-month chart really shows that even the past 3 weeks just zeroed out, and the public moving long, speculators moving long with them. So this kind of supports our lower first in gold, and then a higher move. What's nice about silver and gold, there is a lot of correlation there. And because silver moves faster than gold, sometimes you can kind of make some inferences about how silver may move ahead of gold, yet influencing gold's action. And so that's where we kind of get this lower first within our consolidation zone, or even below it in gold, and then a move higher. So I don't trade silver. Widowmaker silver is, but we do use it from an informational perspective. So again, yesterday we said, wow, we just kind of made an observation that the commercial interests have sold off very quickly, and they have continued to do so this week. Yeah. So that covers our metals and our softs and our energies. Now over to the financial. Here's the ES. Again, we're going to look at the ES, we're going to look at the VIX, and then we're going to look at the dollar, and then we're going to conclude our weekly wrap up. COT oscillator 3-year on the S&P 500. Dealer inventory here is in blue. It's a little different than the hard commodities. Levered money in orange, and then public non-reportables right in gray. Dealer inventory going up, not unexpected, right? They're kind of taking a bit of a longer perspective. However, levered money is getting short and going shorter, and the public as well, kind of reversing around. If we look at this from a 6-month perspective, the financials, guys, that 3 years is a long time in this market. And so while you can see these guys are, in their longest of positions really since around July of last year, that means, in my opinion, that means that we're going to head lower. The 6-month chart really re-emphasizes that. And as I said before, fading the public, we've got our levered money real short, we've got our dealers really short, and when I say short, I'm talking about within their relative 6-month, because this is an oscillator. And now we have the public going in the opposite direction. So you may draw your own conclusions. VIX. Love the VIX. Look at the dealer inventory on VIX. Long and getting longer, which means they expect it to go up. So, this could be a hedge against their super long ES positions, but it just means, in my book, that we're going to see increased volatility. Yeah, the past 2 weeks we've seen a bit of a position change, and it's heading lower. But I wouldn't draw too many conclusions based on that. This is a bit more of a telling telling aspect of it. Finally, on the dollar, no real change from last week, just kind of a hot mess. Tied up here in the middle, and no real move of any kind of any portent to talk through. So dollar's a little. I can't really make heads or tails of dollar, and I don't know if dollar right now is if you're trading the dollar, I'm fairly neutral on it, not bearish or bullish, but a move in the dollar would definitely inform the ES. VIX, though, I think is really the kind of story of this weekly wrap up. It continued, the dealers continue to go longer on VIX, and I would be interested to see how that plays out. So, and here's why I say it. This is August of last year, and they called it, right? Sold right into that high volatility spike. December, we moved back up, boom. And then here, May, right, we kind of took our swoon, and then we're back up, to the 87%. Not where I would want to, continue to expect along in the ES. So, guys, that's the daily market wrap-up, the weekly wrap-up for the 26th of September. We went over performance. We talked through the weekly and daily charts for each of our major indices, and then we gave you a rundown of the commitment of trader data for our major instruments, as well as a few bonuses. These get long. We're going on 40 minutes, but as I said in the beginning, it's work I'm doing anyway, and it's work I figure is worth sharing with you guys. So, by all means, leave me some comments, subscribe, like it if you like it, and check us out over at ReadySetFutures.com. Have an awesome week coming up, traders. It should prove to be an interesting one. Hope you're enjoying your weekend, and I will talk to you guys on your next daily market wrap up on Monday. Take it easy, traders.